So there's a company in South Carolina called Marmac Protective Apparel that sells hazmat suits, and they have this weird accounts payable practice that I had to read twice to understand. When they receive an invoice from a vendor, they staple a blank physical check to that invoice for submission to the accounts payable department. They do this whether the invoice will be paid with that check or if it's being paid electronically, in which case that check should never be completed. Are you following this? They're basically using the numbers on a blank check to sequentially keep track of the bills they need to pay as if the checks were a purchase order. 54-year-old Bob Emery worked in the accounting department at Marmac and figured out a way to exploit this goofy business practice to steal some money. Here's what he did. Let's say an invoice came in for $10,000 that needed to be paid. Bob would record that invoice in the accounting system as a $20,000 bill to be paid, and then attach the symbolic blank check to the invoice. He would then pay that bill electronically for $10,000 and then write himself a check for $10,000, zeroing out that falsely inflated $20,000 bill in the accounts payable system. Now, the vendor was paid in full, and the accounts payable system at the company always balanced, and that's how Bob was able to steal $5 million from his employer over a 5-year period using the scheme. Eventually, someone noticed that a bunch of the bills were being paid half with a check and half electronically, which never made any damn sense to begin with, and some elementary research revealed that the checks were all payable to Bob. The FBI was called in, and Bob pled guilty to the $5 million fraud, and now he's awaiting sentencing. He's probably looking at 4 to 5 years in prison and a hefty restitution bill upon his release. What are your thoughts about Bob's diabolical plan? Let me know in the comments, then have a great day, and be cool.